The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. This is Billy Ray Valentine reaching you through the offices of Duke & Duke in the bunker of 100 South Broad Street, Philadelphia, Pennsylvania, after the protesters came in and tried to tear down the building, which we kept it up, which is good. Folks, I finally found something that was worse watching than the Mr. Pillow commercials, and that is this stuff on the protesters. I'm afraid that when you see stuff like this, it just literally, I'm an old person, but to see this literally makes me sick. They can't... This is the breakdown of society if this keeps going. So we better hope something better comes along, because we're treading on really bad water here for sure. I have to tell you a story here. Of course, you remember here last night that there was a Philadelphia gun store owner that killed a terrorist trying to break into his store, and there was some gunfire between the parties, and one of the terrorists was killed. I will tell you this: I will bet a nickel to a donut that they will sue the gun store owner. That's almost guaranteed. Let me tell you why. 20-some years, I've lived here 28 years, but about 25 years ago, those of you that have been here to visit me know that we live right about up into the foothills. We're about 11 miles from Davis-Monthan Air Force Base, which is one of the big Air Force bases in the country. And in that Air Force Base space is the Border Patrol F-16 fighter, and it's run by the fighter pilots of a Davis-Monthan Air Force Base. Now, when they get on a radar, when they see a small plane coming from Mexico, which is usually about, anywhere from 200 miles to 50 miles on the other side of the border, they can be up in the air in 1 minute. Believe it or not, they're that quick. And this went up. There was a plane coming in, and the pilot in the F-16, wired back to the base. He said, "A plane's coming in." He said, "They're firing at me." And the guy said, "They're what?" He said, "They're firing at me." He says, "What are they using?" He said, "I think it's a shotgun." And this is an F-16 fighter pilot, folks. And what happened was that the guy at the base said, "Look," he said, "take the plane down without shooting if you can." And so the F-16 got close enough to tap the wing of this little single-engine aircraft, and the part of the wing broke off, and the plane came down, and it crashed on the U.S. side of the border. And the two guys in there carrying about 4 million pounds of marijuana and some other, not million pounds, but $4 million worth of marijuana were actually arrested. And then what happened? About 6 or 7 months later, there was a lawsuit against the United States Air Force and U.S. Border Patrol for undue force. And believe it or not, folks, the judge in the case actually it was not a jury trial or anything, it was a trial by judge. They gave the award to the two bad guys that fired on the U.S. Airplane and then also had illegal drugs. Well, what happened was they found out that the drug cartel had paid off this judge to make this thing, and so the suit went away, and these bad guys were put in jail. But what's going on in the country is pretty tough. Remember, folks, if you ever come to Tucson, Arizona, which was founded in 1865, the biggest city in Arizona during that time was Tombstone, with the man that ran the sheriff there by the name of Wyatt Earp and his brothers. Well, when you come to Tucson and you see a U.S. sheriff's car, it says on the side of the car, "God made man, Samuel Colt made them equal." So you've got to remember that everybody in Tucson has at least one or two guns in their hand or in their car or wherever they are. They always have a lot of guns. That's why we have very few stuff of this here. So anyway, this is let's get on to this. We got a lot of stuff to cover, so let me get on to the things that I think are important. Folks, we're at the moment of truth in one market. Well, there's 5 or 6 of them are at the moment of truth, but one of them that is really important, and this is my 2 cents worth. And remember, if you overpay 2 cents, you've paid too much. But let's take a quick look here at the chart of August. Let's do August. I've got August crude oil up here right now. Okay, here's August crude oil, all right? You'll see the high we made back in January was $64 a barrel, and we came all the way down to $18 a barrel back there on April the 24th when oil went negative, minus 37. We've now made a 38% retracement from the high. We've also, if you'll notice, we made the first 38% retracement when we got to 37.50, and then we went negative minus 37.50. So now we're coming back and we're hitting the other 382 percentage point from the high in January. This is a may or may not work, but these are the kind of things that you look at. Now, there's something else that you really need to look at, and that was the August. Remember, the Mercantile Exchange, they barred you from trading June and July most of the time. If you had a very large account and got permission, they would allow you to trade June and July, but most people don't have that. And so what you want to do is you want to remember that this is you have to follow the rules. So now we're looking at the August crude. Now, if you take a look here at the next chart, you'll see here the same scenario. Okay, now but look what happened here, folks. You see here we've made it to the 50% retracement. You see the difference in those two contracts. So that's very important. We went from backwardation to contango, and so I think it means the market's getting back to normal. So pay attention to that. I think it may or may not mean something, but if you like numbers and you like patterns, that are something that you ought to see what's going on. So anyway, let's keep in mind that it's only a pattern. Open interest has been dropping dramatically in the crude oil. I mean, it's been dropping all the time. I mean, it's in fact the only one that had any type of an up move in the last few days was August by just a little bit. Huge drops in July and also in September and also in December. So there's a lot of short covering coming in this. And of course, we have some news coming out with the Saudis, some type of a deal being made, which may or may not mean anything. So we'll have to wait and see. Now, something else that is relatively interesting, if you like patterns, and I think some of you do, we'll get this one up and let you see it for what it's worth. This is over the last 3 or 4 days of trading. And by the way, there's a great explanation by I heard Tommy talk about how can the market go up with the market with all this stuff going on. Well, while we were making new highs last night, this was at this happened at about 6 in the morning this morning, about 3 hours ago. The gentleman on Bloomberg was saying that the reason why these markets were having such good volatility to the upside, he said, because the country has opened up, and you can see with the protesters and stuff in all different places that they're all moving around, and they have to get there. That uses gas, and they have to have places to stay, and that helps housing, and then it also helps their eating. So this is climbing a wall of worry. I guess you're right, Marshall. So we'll do one thing at a time. I noticed that some of these cities had some pretty bad things happening to them last night. And when you see Macy's and you see these main stores in New York being looted, folks, I don't know about you, but I literally get sick. And I lived through the Watts riot in 1965. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and I want to apologize to my 24/7 folks. I sent out a video on gold a while back, and what I did was I posted it from an old gold chart, so I'll send that new one out when we come to the break area, because I believe we're getting ready to see a pretty substantial top in the gold market. I don't think it's going to be, going crazy. It should have gone crazy given the fact of, what we did here over the past few weeks, because and really we should have gone absolutely bonkers. And the fact that the open interest is dropping in gold and silver is not a very good sign at all. And so I think it's important that we look at that video a little bit later this morning. It's not, it's not the end of the world here, because it could continue to make new highs and stuff. But I think we're very, very close. Let me run something by you here that you might have an interest in, and that is here the price of the silver market, because we have a very interesting, if you like ABCD patterns, and I think most of you do, you can see here that we had the rally up to the 61% retracement there in early April. We backed off to a 38% retracement, and that's when we became bullish on the silver. We bought gold, not silver, because silver's a lot thinner. But you'll notice here, folks, since January, we've had a triple top at $19. Well, it's $18.95 an ounce, and we had that same thing happen in February, and then we had it again, and we did take those highs out by 3 cents, and we didn't go anywhere. Now we're 10 cents below that, so it may not mean something, but you've got that ABCD pattern there that just a little bit higher. So this is telling you that you're probably really close to a pretty good top here in the silver. And if you wanted to defy human nature and do the work yourself, if you go back to March, but March 20th, as this, the spring equinox, if you see the low there to the high that we made on the 13th and then go down to the 382 retracement and count those bars, you'll see that the ABCD pattern is equal in price and time. So that's pretty important, I think. And the other thing, if you remember, we had our friend Bill Meridian on, and what he talked about was the fact that during the time of June and July is the weakest time for gold on a seasonality basis. You can see here that June and July are the weaker times. So this is what I think we should be thinking about, is preparing for a big sell-off, possibly a substantial sell-off in gold and silver, down to some really good support level that we didn't think we could probably make. Maybe a $200 or $300 drop in gold, and maybe 3 or 4 cents in silver, and that would give us a really good buying opportunity. But right here, I don't think you can do it, because open interest is dropping, and we saw this in the bonds. We've seen it in so many things that it's just literally, it's not very smart, because when prices go up and open interest drops, that is short covering. That's the main thing. Yes, today is June. Mr. Z's told us that we have perigee today, June the 2nd, which perigee means that the moon is as close to the earth as it can possibly be. On the other side of that is apogee, when it's as far away as you can possibly be. And believe it or not, folks, a man named Pythagoras at 673 BC had that all in his notes. And believe me, folks, they thought the world was flat until 1492. So he was way ahead of his time. He also knew the distance between the Earth and the moon was 250,000 miles, and he was absolutely spot on there. I think it's 254,000 miles. And so he really knew a lot of stuff, and definitely one of the smarter people in the world. I remember one of the quotes from Albert Einstein. He said, "There was God and there was man, and in between was Pythagoras." So very important to remember the works of him, and also the work of Sun Tzu, The Art of War. That's a great book on strategies and stuff that works with trading as well as some of the other things that we deal with. But I think if you really want to get started and you're having trouble in trading and you don't know why, you could read, Mark Douglas's book, Trading in the Zone, but you probably think that's, a bunch of baloney, which it certainly isn't. But all you have to do is read Reminiscences of a Stock Operator by Edwin Lefevre, and that's a story of Jesse Livermore, and it was really, really pretty good. Yes, you're absolutely right, Duffy. Newton was pretty sharp. They asked Einstein, who were the smartest men in the world? And he said, well, number one was Pythagoras. Number two, he says, was Galileo. He said number 3 was Isaac Newton. I can't remember the fourth one. And the fifth one, he said, oh, that's me. So he put himself in the top 5 of those things. I think I think number 4 was Tom O'Brien, but I'm not sure. No, that was before Tom's time. So anyway, that's what we're looking at here. I'd like to read some of that stuff. Newton's, folks, I have to tell you a story here. We have a friend here that is one of our students that has a original, believe it or not, it's the most expensive coin in the world. It's an original issue of Isaac Newton, and as he was the first Chancellor of the Exchequer in London. And basically what it is, it's a picture of Isaac Newton. And the coin is a little larger than a $20 gold piece. And it was minted from one of the Spanish galleons, I think one of the Spanish mines, I think called the Vigo. And it's one of the most expensive coins in the world. It's $5 million for one coin. And I was able to hold it in my hand, and our little grandson was also able to hold it in hand. He never forgot that. He always talks about it. But it's really an incredible coin. I think it's called the Newton dollar, if I'm not seeing a thing. Okay, now Bob is saying Christmas corn is now on the bottom. It means it's sold off some more. Well, it's not unusual because China is not buying stuff, folks. That's the main thing. Since we have a question about Christmas corn and we have the time, let's just get up here and take a quick look at the old Christmas coin and see what we can come up with. Give me 1 second here. All I have to do is find it now. There it is, down here at the very bottom. Just a second here. Oh, no, that's oats. Doggone it. Give me a second, boys and girls. I got to go up to the top of the page and get it. Never could get an oat chart because I don't get those on my system, and I haven't traded them in about 50 years, so I'm certainly not going to start now. Let's get up here. There we go. This is Christmas corn. And we'll get it up here. Oh, it's not on the bottom. What are you talking about? It's still in the buy zone here, as near as I can tell. Let's get this up here. I still think it's okay. Let's move it up here. You'll see here. This is not in bad shape. Come on, guys, give me a break. Let's get this up here so we can take a quick look at it. First, there's nothing going on, but that doesn't mean that something's not going to go on. We got up to, we've not gone very far. We went from 324 up to 342. That's 11 cents in corn. That's like when I started trading corn, folks. Do you know that the average trading for a week was about 3 or 4 cents, and a month it was about 8 or 10 cents? That was a monthly trading range back in 65, 66, 67. Now, look what's happened here. We're making higher bottoms. We're making higher tops, and so keep an eye on it. I think it's a buy at around the 333 level. You got to stop it below 325, but that doesn't look bearish to me. That looks relatively good. Now, we've also talked a few times about this. Hold on one second. It was about this natural gas, and I think we still have a chance in natural gas. Every time we bought it, yesterday it rallied a little bit, and we're going to see how it's going to do today. And here we are again. We're trading at the 178 level, and it shouldn't get below 175, 173. So it's probably a buy here at 178.30, and you could stop at say 174, so you only have to risk $4.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, here we are, folks. We're going to check the openings here. By the way, on a programming note, tomorrow we're going to have Arch Crawford of Crawford Perspectives as our guest. On Thursday, we're going to have Andy Pancioli from the UK. He had a special date coming up. And then on Friday, we're going to have Tim Bost. And I'm trying to squeeze our friend Norm Winsky in here because he had some information about this eclipse that we have coming up here on this full moon of the 5th. So that'll be interesting. A lot of charts are making really interesting patterns. I mean, every single one of them that we're watching, just as we're at a real critical level. The trouble is, when you get in some of these, you might have to kiss a few frogs before you find a princess. Now, I wanted to switch gears here a little bit and bring you over to one that we've been watching here. It's a cross rate between Europe and Japan. Okay, Mike is long platinum. Mike, just be really careful on the platinum, my friend. Let me get the platinum. Let me talk about this first. But you can see this pattern that we're having here. And here's what you have to do, folks. Since this, I don't think we have the time to do it, and I don't know if I have the energy to do it. But take a look at the video that I sent out this morning on the euro and also on the pound. The euro did exactly what we thought it was going to do. It took out those highs. Let's see if we can get those up here. We probably can here. Just get it up here for a second. Okay, let's get this up here, and so we can take a quick look at it. I've got too many things going on here. Okay. All right, here we are. Let's take a look here. We took out these highs up here at 111.90. The high was 111.91, folks. The high over here on the left back in March was 111.89. Took it out by 2 pips, and there's nothing there. I mean, my goodness, that tells you that, that's market feedback. It's what the market's telling you that, wow, there's not too much there. Just to give you an idea, look back in December. We had the 61% retracement. You see how you went above it for just a little bit and then came right back below it? That's another thing that tells you market feedback when you're looking at these patterns. And that's just common sense. I know you can't put that into a computer, but, by golly, that's really what it is. And these patterns, they are predictable within limits, but they do tell you, what the risk factor happens to be. Now, let's help old Mike out a little bit in the platinum because I think we're at a very, very key level. In fact, I know we are because I sent a video out on it last night. Let's get this platinum chart up for Mike, and we'll be ready to, they're taking the stocks down a little bit, which is happy, makes everybody a happy boy. All right, let's take a look here at the platinum. We'll get this up here for Mike, and you'll be able to see where we are. Mike, just bear with me here a second. I'm not the sharpest knife in the drawer at this time of the morning, especially since I've been up for quite a bit. Let's get over here. Boy, they're beating the NASDAQ up a little bit, too. Maybe that big pattern helps. Okay, here's where we are, folks. We'll get the platinum up and take a look at it. Remember now, we've got gold breaking out, and we got the darn silver making a giant ABCD, and all platinum can do yesterday was to make a 61% retracement at the 907 level. 908, 908, let's say call it 909, and now we're $20 lower. That's not a good sign. So keep in mind that it needs to get above 910 to at least 910 to make it still bullish. But we did make a 382 on that. We focused on that quite a bit, and we had a nice rally from 855 up to 909. But now we've hit that rally, and that's pretty much what we're paying attention to. So let's remember that because that's all we're talking about. Now, one thing I mentioned, let's get through this thing I wanted to share with you. We've had a big move here in the NASDAQ here. We've dropped well over 100 handles here last night. And I believe it made a new high. Hold on a second because I had my, yes, it certainly did. Let's get it up here so we can see it. You can see here that we did make the new high in the NASDAQ. Of course, we didn't in the other ones, but the NASDAQ, because that's, basically about 6 or 7 stocks. When you look at Microsoft and Apple being 22% of the NASDAQ, you throw in some of the other big ones, Google and Amazon, Netflix, and, your Tesla, Facebook. I mean, you're talking, just a few stocks that are making these things move. So I think it's important to pay attention. Now, folks, someone just Skyped me. Is this the top of the stock market? I have no clue. I don't know. And you know what? I don't care. I look at things on a shorter term basis because shorter term things I can control. And it's not important whether you pick a high or a low or whether it's a bottom or a move going down. You don't really know that. All you have to do is to try to find a situation where you have more money to make than you have money to lose. And that's what trading is all about. You don't have to be a provocateur of where the market's going to be. And I don't even know what that word means, but I heard an announcer talking about it yesterday, and I said, gee, that's a pretty cool word. So I'll have to look it up and see what it means. That's the other word that I use is eclectic, and Byron Tucker uses it all the time. And another one I don't understand. I'm just an old country boy from Terre Haute, Indiana, folks. We didn't cover that stuff in pharmacy school, so let's remember that. All righty, one other question that we have down here. If anybody wants to call in, it's 877-927-6648. That's the main thing that you want to try to do. Okay, let's see. Any other questions that I see here? No, I think we're okay. Yeah, we'll prognosticator. Boy, that's a good one, Peak. How's your weather up there? You got any snow yet? Shouldn't be getting any now with the weather starting to warm up a little bit. We'll see. Okay, let's move on here, and we will get up here 1 second here. And another question that someone had. What was the other question? The euro. Let's go back to that euro and give you a little heads up on that because I think it's an important one to pay attention to. We'll get up here to let you see it here. Just a second. There we are. And this is what I'm talking about, and we'll be able to see where we are here. Okay. And you'll be able to see it updated. 1 second, and there we go. Okay, it's getting hot, yeah. All right, there's the euro chart. Now, we've taken out the high of March by 2 pips. Whether that means anything or not, I don't know, but it should mean something because there were no buy stops there, at least not yet. And look how many days in a row we've been up, folks. We've been up 1, 2, 3, 4, 5, 6, 7 days in a row. That means the probability of a market making some type of correction is about 85%. Now, does it work all the time? No, of course not. But when it does work, it's important. So you don't have to risk very much as you look at this. So that's a real important thing to look at. Now, I'm going to share with you some just basic statistics here just to see if the market's going to act the way that I think it's going to act. And remember, this is just an opinion. And if you pay more than 2%, you've overpaid. Now, watch the price of 96.10. That's 30 handles from where we are in the NASDAQ right now. Watch that high. Watch the high of 96.10. If that right after the opening, you see we had this big break. Now we're breaking down, but watch that price of around 96.10 to probably could be some 96.10 to 96.05. But watch that price very closely because if we don't exceed that today, that is a very, very negative feedback information point in the NASDAQ. Now I know the NASDAQ is like trading pork bellies because it's so volatile that I don't trade it, and I don't recommend other people do it unless you have big bucks and you know what you do with that thing, but it pays big bucks when you're right. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks, and I posted a chart of Bitcoin. Bitcoin is now trading at 10,100. It didn't quite make that. It made the 382, but it didn't make the ABCD pattern here. This is actually beginning to start looking pretty bullish, folks. Those of you that attended the live trading thing that we did back on, I forget what day it was, back there in May. I think it was on the 29th or something like that. No, it was earlier than that, maybe 21st. I think it was the 21st. Yeah, 21st, we did a live trading. We had a good day, made a few bucks, which was nice, but we had a little bit of a talk about, these cryptocurrencies and blockchains. And basically, we spent some time on one particular one that's up about 30% from where we bought it. But this is a breakout here. Now, remember, folks, Bitcoin was at 19,900 2 years ago, January of 18. Well, that's more than that. That's 2 years ago. We came all the way down to 3,200. And you'll remember, folks, I think, was it 3,800? Anyway, what that tells you that is, it's not a, what do you call those things, a bubble. It's not a bubble. If it were a bubble, it would be history. Bubbles go to nothing, but that's pretty much it. We'll see what's going on. So that's all I'm looking at. Let's take a quick look at what the markets are doing this morning, just to got a few orders in there that I'm looking at. So give me a second here. We'll take a quick look at them and we'll find out, where we are. But keep an eye on that 9610 in the NASDAQ. That's going to be a pretty interesting one to look at. The gold market has some resistance up here at this 1755 to 1765 level, and that's the main thing. The one that is really going wacko, folks, is the British pound. Boy, it's had a tremendous move here. We knew that it had really good support, but let's take a quick look at it on what we were watching this past week, because we thought that it had a pretty good chance of having something pretty dramatic happening. And boy, we're right up here. Just let me get this up here. You'll be able to see it. We have almost reached it, folks. You'll notice here we have this 61% retracement coming in right there at the 25.88 level, and we're 25.68 right now in the British pound. So this has had a pretty good move. Came off that strong support at 2100, and there's where we are in the British pound. That could be related to the fact that the coronavirus, you don't hear the coronavirus anymore, folks. The one thing that's happened is the terrorists have taken front and center over the coronavirus. Now, when people start to die in greater quantities, if and when they do, then maybe the coronavirus will come in. But the news certainly has a lot of things going on, and of course they always have other things to talk about, which is always good. So let's remember that. Hold on just a second here. Someone had a question that I'm not going to be able to answer right away, and that is this dollar index. And I want to bring this up to show you that we've broken down below this dollar index support. We talked about that. And we've got all the way down to this 97.50 level. That's just really important, and because that's a 1.618 expansion, that equates to that euro at 111.19, so 111.91. So let's remember that, because that's another key number. We just have a lot of key numbers coming together. I posted that ABCD pattern in the S&P 500. Is quite easy to see, but the main thing is that may or may not work. That just means it's going to correct. Well, it's already corrected 23 points, 23 points from the high. So that tells you that there was at least some type of a correction there. That's the main thing to look at. Someone's asking a question about the natural gas, folks. It has support at 177, and if it gets below 174, it's probably not any good. So the pattern is telling you that you have a $3 risk there, which is $300, and that's the main thing that you want to keep in mind. So that's all we're watching right now. The euro yen post that we did a little bit early has started to work a little bit. Let's get this up here. And someone missed the first half hour, shut the front door. All I said on the natural gas, I'll repeat it, and that is pretty strong support at that 177 level, and below 174, you don't want to have anything to do with it, is my opinion. And of course, if you pay more than 2 cents for it, you probably overpaid. So don't overpay for anything, folks. It's not quite worth it. Let's see if we have any. There's a lot of talk in the news about this possibly being a very cold summer and cold winter. So whether that's going to be the case or not, I don't know. All I know is that we're starting to get warm weather here in Tucson. We hit 103 the other day, and we start getting our monsoon rains here in about 2 weeks, around the 15th of June. We get monsoons for June, July, August, and part of September. Rains almost every day for about 10 or 15 minutes, and when it rains, it really rains with thunder and lightning. And of course, we have a generator here to keep everything running, but even sometime that doesn't make a difference. So we'll see, how the weather's going to turn up. But frankly, I've never been in a situation in all these years where we don't have at least one or two crop scares. The problem is, folks, one of our biggest buyers has been China, and we're in basically a Cold War with China now. So it's going to be interesting to see how this unfolds. We need them, and they need us. The question is, who's going to bend first? And I don't know the answer to that, but we'll just have to wait and see. Now we can get along without them, and they can get along without us, but that's going to change the way the dynamics of supply and demand, and we are maybe not surprised about that. Remember when Tommy was on this morning, he talked about all the things that were out there. I mean, we got the coronavirus, we got riots in many cities, we got the Cold War with China. We got to worry about North Korea with their things, and we got to worry about Iran. I mean, it's just a lot of things going on, and that's, boys and girls, is why I'm a technician, because I don't have to listen to that baloney if I don't want to. I just have to look at the charts, and they can tell me whether things are going up or down. And that's really what you have to try to do. When they work great. And when they don't work, it's telling you to get the heck out of Dodge and put your stop in and move on to something else. Because if you don't use a stop, you're telling the market that you know more than they do, and that's not it. Now, we have, when Mark was here writing the book, Trading in the Zone here in our office, we interviewed some of these guys who were massive traders, and they couldn't put a stop in on 800 hogs or, 800 soybeans or something like that. So if it went below the stop, they would begin liquidating. In other words, it was a place where once it went below there, they knew they were wrong and they had to get out. And boy, to see the discipline that they had to do that was really, really something spectacular to see. So you've got to remember, we have someone on as our guest all the time, Rich Anderson. He trades those size of positions, and so that's how he does it. The other thing he does is for his stops, he uses the option market, because the option market is about 20 times bigger than the futures markets. And if you know how to do that with selling calls and selling puts, that you're able to protect your positions, without using a regular stop. But if you trade large size, that's what many of these folks do. So you got to keep that in mind. Follow the leaders, baby. That's what you want to do. The financials have turned green this morning. That's usually pretty good. Now, what we want to do is to watch the banking stocks and then watch the oil stocks today, folks, because if oil gets really strong today, this pattern is broken and we could see some fireworks. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I wanted to focus here just a tiny bit here on this 15-minute chart on the E-mini S&P. Let's get this up here so you folks can take a quick look at it. By the way, remember, we have tomorrow, we're going to have Arch Crawford from Crawford Perspectives, Thursday, Andy Pancioli from the UK, and Friday, Tim Boss. And I'm trying to get a little cameo appearance for Mr. Norwinski, too, because he talked about this. You'll notice that big ABCD pattern is going back to May 30th. That number came in at 30.75. That was the high last night, and the ABCD on this other one was 30.73.50. The last time we had a major correction, folks, it went from 30.57 all the way down to 30.37, so we dropped 30 handles. So if we drop more than 30 handles today, that will tell us that this is a potential for a pretty significant correction, because this is basically the completion of a 4-day pattern. And if you get a little bit of a pullback, if you just pull back your normal amount, which would take you down to 30.50. So if you get below 30.50 in the E-mini S&P, that's going to tell us that you're probably getting ready to see the market go down a little bit lower. Now, so far this morning, the low has only been 30.51. So keep a little beeper on that at 30.50, because you get below 30.50, it's telling you that, maybe it's going to go a tiny bit lower. So keep that on your plate to watch it very, very closely. I think it's quite important. So we've got one more minute to go. Any questions? Someone asked about the live hogs. Folks, just put some meat in your freezer, because down the road we're going to see some pretty high prices. And we'll be talking about that next week when we have Rich Anderson as our guest. We're going to have him on for a half hour, probably next Monday, to talk to us about the agriculturals and also, some of the crop things that are going on, what the farmers are going through, which is not a fun thing, of course. So those are the main things. Right now, keep a close eye on 30.50 in that S&P. Get below 30.50, 30.48 or something is telling you that we're probably going to, 30.48, you're going to be down 20-some handles. And remember, we're only looking for 30, so keep that in mind. 877-927-6648.